Today we are going to take a look at a company that I really love. It's also included in my portfolio, and this bank is a fintech bank located in Brazil, but also operates in Brazil, Colombia and Venezuela, and soon be entering into the United States. And the tool that we are going to use today for analyzing the stock is going to be MetisOne, which you can check out in the description. In the stock analyzer, we are just going to simply put in the ticker symbol, which is NU, and we will see that the stock price in the last 3 months has been decreasing from the 17s down to the 12-ish right now. The new earnings was quite good, but the market were expecting better ones. We're gonna take a look at, and also we're gonna just quickly value the company and see if how big of an opportunity it could be for myself. So let's see, on the financials we can see their annual earnings in regards of 2025. The company has been increasing revenues, and also their gross profits are extremely great. Their profitability is one of the best in the segment, and also they are servicing more than 135 million customers, and most of these customers are active and using it. And as you may know, they are going to enter the United States market, which is going to bring more opportunity for the company for sure, especially if they are workers from Brazil, Mexico or Colombia that are working in the United States, and they would like to transfer money home, and also just create a wireframe that would be able to service them. It's a great opportunity. It's a great logic. So we can see that their revenues has been increasing, and also by the latest terms we can see that the company is performing very well in terms of the metrics. If we check their forward PE ratio, it's about 19-20ish, so it's also priced in. The PEG ratio is just below 1, and obviously this company is still in the phase of developing, but the return on equity getting to 30% is just an amazing number. And also the stock price depreciation is sort of, I think, a general market trend. So if you would look like a similar companies in the United States, it also experiencing very similar sort of touches. It's a mix of the risk that is in the market, and also a mix of the AI or just the general market trends in regards of these situations. So we can see that their growth is extremely high. From year to year they are performing very good, and they are just turning to be getting more profitable from year to year. And on the cost map we can see in regards of their profitability that it has been increasing. If we, for example, go back to 2022, they were not profitable, but if we go to 2024 you can also see the increase of the net income volume, and they're probably gonna be around the 20-ish in my analysis. So it's a great way to make money. And also if we would just take a deep dive into their valuation, we are gonna use a simplified discounted cash flow model. Our generic model is already calculating the suggested growth rate, so it puts in 18-19% almost, and the WACC, which we are gonna discount the future cash flows, is going to be 14.6, which is quite high. It's due to obviously the risks, and also about just the general previous assumptions. So obviously you can change. If you believe it's gonna be 9, you can just do it. You can see the calculations exactly how is it being applied. So it's nothing very hard. It's just an average from the conservative and the aggressive one. So you can take the 13 if you'd like to. I'm just gonna go with the 14 for the simplicity. So you can see that the estimated share price is gonna be around 18-19 US dollars, which is obviously much higher from the current rate. It's about with a 50% upside potential, and you can see the reasoned or the projected free cash flows about the years, so 2026 and from there, and this would mean that they would actually grow in millions of customers. So obviously there is still a large opportunity in Mexico and Colombia. Mexico is a net zero now, so they have just became on net zero this quarter, so they're probably gonna receive some net income from there also, so that's gonna boost their total earnings power in the long term. And obviously, the company has a very nice balance sheet that could give them the opportunity to risk some things. If we look at the sensitive analysis, we can see that what would happen if the WACC would be higher or lower, or the growth would be lower or higher. We could see that with a growth of 14% and the WACC at the current stage, it's still underpriced. So even if the market would be sort of not functioning as well, or their demands would be decreasing, you could see that there is still some possibility in terms of a defensive style of investing. But of course, as a long-term investor, I would prefer to stick with it at least for 5 years and just change the growth rate from Q to Q. And also we can see that the bear case and the base case and the bull case are also in the positive terms. So if you look at the bear case just down in the left corner, you could see that the growth rate is around 14%, very realistic, and the discount rate going up to 16, that would give the fair value for the company around 13, which is already 10% difference between the current share price. So I believe that there is a sense of risk in terms of the developing markets, and especially with the war in Iran, it's gonna impact the consumers in Brazil, Colombia, Mexico especially. So obviously there's gonna be an inflationary effect on that, but there is a general trend of these developing countries becoming more online in sort of using a simple way of banking. It's very important that they are able to get a credit card in this way. So it's sort of a part of a bigger trend than just quarterly numbers in my belief. And if you look at the South American possibilities and also the economical dependencies of South America, I generally see a great possibility in terms of a long-term play. You can use the summary dashboard, which would just generate a general report for you, summarizing all the financial metrics, all the details. If you are not in the willing of reading, or if you just want someone to help, it's obviously just gonna gather all the numbers that has been previously shown, and it's gonna submit some of the structural ideas in terms of valuation, growth, quality, and safety. So you would see the strengths and also the concerns in regards of the company. You can see the moat and the capital allocation, how the margins and the financial terms are generally moving, and this could give you a great snapshot about the company without reading the actual details. You can see their EPS growth year over year, everything actually included here. So this could give you a great sentiment, and also including a technical indicator. So you would see some not only fundamental ideas, but also in regards a chart or the general trends, and you would get at the end the key highlights and the risk factors that you have to take in look. And if you want to read more, you can just click the recent news that has been there, and you can have follow-up questions. So you can ask what is in the balance sheet, what should I be risk aware of, or how is the American market is going to be affecting their margins. You can sort of ask these things, and it would gather it from the detailed data behind the model. So, and just before we finish this video, I would love if you would subscribe to my channel and support my work, and also feel free to comment down your opinion and also the next stock I should analyze in this YouTube channel. Join to MetisOne, as it's a great tool, you will see it, and also feel free to have any questions down in the comment section. See you in the next video, and don't forget to watch these 2 YouTube videos that the YouTube is now suggesting to you.